Hello and welcome to the Weekend Investing Daily Bites. We're shooting this episode on 2nd of May and the market continues to rally. We have now hit almost 18,200 intraday, higher than the mid-February high that we saw. Uh, Also a very nice inverted head and shoulders pattern that we see here, which has a potential target of 18,800 odd, and this also will coincide if we reach there with the previous top. So everything is going as per a good setup. Whether we will hit 18800 or not is a guess, but the pattern is there, the breakout is there, uh, and, uh, and a retest of the previous high is always on the cards when the market is very near it. So all is looking all right on the Nifty front. Of course, we've had 6 days on the trot in the green, so a couple of red days anytime can hit us. That is par for the course. Nifty heat map reasonably well distributed in terms of greens and reds today. Kotak Bank, State Bank, Tata Motors, Sun Pharma, Bharti Airtel, Ultrasemco were some of the stocks losing some ground. HDFC Life, Maruti, Infosys, Tech Mahindra, Tata Steel, JSW Steel, Hindalco, Eicher Motors, NTPC, ONGC, some of the stocks gaining ground. So I think pretty much mixed bag in terms of the Nifty 50 universe. Tata Consumers, Eicher Motors also in the list of stocks that went up. So no one defined trend today, but the public sector enterprises was the main sector that was running today, plus 1.6%. Metals also not far behind, plus 1.4%. Energy and IT stocks very after a slumber coming back in the top five or top four gainers, plus 1.1%. Commodity stocks also gaining 1.1%. And the only sort of sectors that did not participate today were real estate, FMCG, and pharma. For with real estate having run up 15% in the last month, I mean some rest is warranted, and FMCG and pharma because I think it was a sort of a day where some risk on kind of sectors were forging ahead, so defensive sectors took a rest day on that. So mid cap index looking very very strong. We've taken out this January 23 top also now today. So now it seems very likely that we will challenge the previous high, the December high, very very soon on mid cap index. So mid caps are doing all right. Small caps a bit of a spinning top kind of a formation here. It has come up very smoothly from the bottom and it has not given any correction so far. So maybe here or maybe near this trend line we may see some consolidation before which after which it may break out into this new zone going forward. But so far, I think this 9400 to 9600 segment will be a bit of a consolidation period here. Nifty Bank opened higher, closing a bit lower than that, still higher than previous close. So the trend remains intact, but it is giving signs of getting exhausted. And of course, it is very near its in the previous high also. So all good in terms of how the market is looking. The results have been pouring in. The results have been satisfactory. The overseas cues have been sort of neutral. We have the Fed meet tomorrow, so we will react and open on the Fed outcome on Thursday morning. I think that will set the real trend for the next many days, and I'm expecting Fed to announce maybe a quarter percent hike, but along with that announcement, also announce that it's done for now, and that may set off the fall in US dollar index, which I believe can give a massive fillip to emerging market flows and precious metals also. So public sector enterprise is what I was talking about, and if we want to study a longer term chart on this today, so this is a 27-year chart on public sector enterprise. You can see that from 1995 till almost 2001, there was a drop of almost 70% in public sector enterprises. So the governance of PSEs or PSUs, if you may want to call it, was pathetic in that period. And then from 2001 2002, the public sector enterprises started to pick up, and there was a massive rally going from 2001 till 2008. So even before the 2003 wider rally started, you can see that the rally started in public sector enterprises in 2001 itself, latter part of 2001, and it went from 315 to 4,500, 4,700. So almost a 15x rally in 6 years. So just imagine 15x of a sector index going up. You can imagine what the sector constituents, some of them would have done, 30x, 40x, those kind of gains would have been there. And since then, because it was such a large expansion of the PSE index, it has taken 15 years of consolidation post that. So it has been consolidating for 50 years, and today it has broken out from this 2008 high. And the last time it broke out from its significant previous high, it went up many folds. It can still do that. So while it may seem that we've already come from 2000 to 4700, so more than 2.3 times since the bottom in COVID, but I think this chart is telling me that it can go much higher in the years to come, and public sector enterprise, which includes public sector banks also, will continue to perform going forth. So extremely good omen for public sector enterprises. Today's spotlight is on Nifty 50 stocks. So we will see how Nifty 50 stocks have performed in the past 1 month, 3 months, 6 months, 9 months, and 12 months, and maybe try to get some trends out of here. So what we can do is we can very quickly rank, basis 12 months, for instance. So ITC has done the best over 12 months, best over 9 months, best over 6 months, best over 3 months, and Tata Motors has done the best over the last 1 month. But if I were to see overall, I can see that ITC, L&T, Bajaj Auto, Nestle, Dr. Reddy's, Tata Motors, Britannia, HDFC Twins, ONGC. These have done reasonably well in the 3 to 6 9 month period, whereas there are stocks, like Infosys, Cipla, Bajaj Finserv, Adani Enterprise, Tech Mahindra, SBI Life Asian Fit. All these have done very poorly over the year. So just the color of the ranking will tell you how stocks have performed versus within that 50 universe. And what we do at top India top 10 strategy is that we pick the winners out of Nifty, long term winners, so 6 months, 12 months, that kind of a time period, and we take the strength of those long term winners and follow that till they are replaced. So if you see long term rankings, then all these stocks have really done well over the past 1 year. And if we further want to see very near time performance, then last month, Tata Motors, Adani Enterprise, Bajaj Auto, Divi's Lab, Aisha Motors, these have done much more than the Nifty itself. And then, of course, there are stocks that have really underperformed. So Infosys is down -9, Tech Mahindra, Levers, NTPC, Sun Pharma. These have not performed at all in the last month. So just to give you an idea that within the Nifty also there are pockets of strength and pockets of weakness. And over time, if you stay with the strength of the Nifty, so if there are 50 stocks and you are able to identify top 10 stocks which are strong in any given month, and then you are able to avoid the the bottom 30 or 40 stocks, that itself can generate alpha over time. So this is something that we do in India top 10 strategy at Weekend Investing. If you're interested, please go to weekendinvesting.smallcase.com and you'll find it there. But just to give you an idea about how these stocks have performed and some charts. So Tata Motors over the last month has gone from 400 to almost 480, up 20%. Adani Enterprise has also gone up after the crash from 1580 to almost 1900 odd, another 20%. Infosys, of course, has broken down from this pattern below this neckline and down since March at about 9.5%. ITC, of course, has been a big winner since COVID bottom at 140 and now it is at 424. So last 12 months up almost 63%. L&T also very silently moving up, but moving up very rapidly from on below 600, below 700 at bottom of COVID to almost 2300 now, and the last 12 months up 37%. So this is all I had for today's session. But please do keep watching the daily bites from Weekend Investing. We try to give you, whatever insights we are able to derive from the market, some spotlights on some stocks and some sectors, and some performance of the market and the market segments on a daily basis. Thank you so much for watching. Bye.